Hello traders and welcome to Swing Scans. This is Ken Calhoun, president of Day Trading University and Swing Trading University, coming at you live here. Volatility Scans. In terms of swing trading successfully, particularly in today's markets, it's important that you avoid compressed range, narrow range plays and instead work on those that have a decent combination of our two V's being volume and volatility. I like things with price action between $20 and $70 a share, and those that have at least a minimum 10% range on a 15-day chart. So on a 15-day chart, say if the bottom is price is 50, the top should be 55, which is 10% of that, or higher. So you've got at least a 10% range to work with. Volume should be at least 1 million shares a day, so that it's not some lightly traded instrument that's likely to gap up or down against you. Our core, our primary trading patterns are looking for those that have 15-day highs, cut breakout continuations, what I call acceleration ramps. That's where it goes, say, from a 30 or 45 degree angle to a 60 degree angle on high volume and takes out new highs. Those are usually good for continued moves up. You know, the trick to swing trading successfully, and I'll tell you, the thousands of trades I've made and millions of dollars worth of trades I've done over the many years I've traded since the late 90s, I know that it's much more important to get in on something that's likely to attract. Get in at a price point that's likely to attract new buyers after you get in. You don't want to buy an exhaustion high after it's already ran and you're buying from the last gasp of price action before it fades back into the range. Instead, you want to be the smart trader that trades at a point, an inflection point, so to speak, inflection point that's likely to attract new buyers after you get into the trade. And so that's what we cover. Swing scans are some of the best of those patterns. And also 90-day wide range candles. It's one of my favorite patterns, where you may have seen my articles at equities.com or other places, or my live presentations for the Money Show, Traders Expos, or my industry articles or other industry appearances. You have a bullish cut pattern and a wide range candle. Wide meaning at least 1.5 to twice the height of the whole real body of the previous candles, occurring at the right side of a cut pattern on a 90-day chart. Those tend to produce some of the very best follow-on trades for swing trades. Let's see our trader guidelines for how to work with me in these. I do have it open for Q&A. I appreciate, because of so many people here, we keep it to 1 or at most 2 questions, and I don't cover say other people's picks or that kind of thing, because I don't have time with so many people here. The goal is to see my top 10 picks, plus I've recently added 1 or 2 cheap stocks and several ETFs into the mix, so we get at least a dozen or so each week, top picks each week. They are posted in the members area. Now, I updated it this morning, so it has all of the upcoming week ahead tickers and price points. I've expanded coverage on some of the bear ETFs. We also have sector spikes, or strength in what's moving with our sectors. And I also have the last week's 10 picks there for reference. We use no more than 1.5 point initial stops. Keep things tight. Exit targets usually around half of the 15-day range. So let's say something goes between, say, $30 and $40 per share, 30 and 40 on a 15-day chart, a pretty wide range for a $30 instrument. The exit target, let's say you buy 40.5, would be 5 points, or half of that 10-point range up, just under 45. So you're looking for about half of, kind of Fibonacci 50% extension of a 15-day price action breakout range. Member rules of conduct, and I just ask a few, kind of like effective meeting rules in the corporate world, where, you know, one person at a time talks and you have all these other, you know, encourage active conversation, those kind of things. It's not for a lot of Q&A, because I have to cover everything in the next 25 minutes. But if you do have a brief 1 or 2 questions, you're certainly welcome to ask those, especially as it relates to any of the charts that we've covered. It's either live only. I do have the alerts there for you. And I think that's about it for our slides. So anyway, let's get underway with this morning's presentation. Thanks everybody for being here. This is Ken Calhoun, Swing Scans, and I'll see you guys in our next upcoming event.